All right, everybody, we are live. Get the little message out here. Let some people roll on in. Because you know, not everybody can be on time. That's just crazy talk. Joe Lopez, what is going on? I already have my gin and tonic. Love G&T. Bombay Sapphire. Currently at 786 support, but I doubt it'll hold. My drink is going too fast. What's up, Joe? What's going on? Yeah. So Bitcoin made a move down. Although, if you take a look at that little arrow right there, it's exactly where we wanted it to be. Boom. All right. So this isn't like it's not a surprise. It's not a shock. It's not like it's the end of Bitcoin. Everyone's got to, it's okay. Everything's fine. All right. So in the morning update, we were talking about coming back and testing this level here on the low side with an extra low side being a double bottom. On the high side, I was really optimistic for a test of the 4-hour swing fail, which is this blue line here, which would have represented the top of this range that we haven't touched yet, right on this push. All right, we touched range and this level of resistance, but we didn't get to this level, and that would have been a really good spot, 8450, yeah, high side 8500, but in that ballpark, 8430 to 8460. So we didn't get the high side test. We got the medium test here, so we got these two levels where you sort of push through, right, and push through, and we stopped right like dead even on that line. I believe that's the 21 EMA on the daily, if I'm not mistaken. I don't think I have that on here. I do. Yeah. So the 21 EMA, you can see right here. A little hard to see, but we'll get rid of this junk. All right. So the other day we came close. Yesterday we got rejected. Today we got rejected. All right. That's the 21 EMA on the daily. Pop that off for now. Okay. So, yeah, this move is okay. There's nothing wrong with it. There does become a problem if we start trading below here, right? Like we said before. So 77.65, that's when, we have an issue. Until then, we're still just maintaining this choppy range right here. Really low side, 78.50. High side, 85.90. Right? That's basically the zone. Right? Daily top candle right here. Daily bottom close right here. All right. So until, something invalidates that level, then we're still okay. I have no problem, like I said this morning in the update, I have no problem coming down here and testing this level. I would expect to find support. So we'll see. The volume picked itself up to actually match yesterday and then push a little bit past it, which was surprising given how it looked earlier. But now you take a look at the same thing on, say, like a 15-minute chart, and you can see how it was like kind of sideways, going up a little pullback, pushed up again. Now, of course, on here, you test this blue line perfectly, but whatever. I got no comments on that. And then it comes down, finds support, pushes down through, buys it all back, roams around that support zone again. That's that 8,200 zone. Loses it right here, comes back for a retest, and then a quick push, 115-minute sideways, huge candle down with wick, pushes it all the way back up, back into range, moves up, down a little bit, nothing crazy, and then we dump through range. From there is 1, 2, 3 strong candles down, But that bottoming wick, again, just like this wick, you expect, because of all that buying, you expect the momentum to reverse and to be now on the bullish side as opposed to the bearish side. But it needs to find that spot. Otherwise, these are called testers, right? So you come down, you test that level, that area. You're basically seeing if there's anybody down there. And then price will normalize itself. And then you will get down there. So the test checks out. And then over here, same thing. You test it out. Okay. We know we're good. There's tons of buying. All right, we're good. So we come back down again and we push a little harder. Understanding what they're thinking, or at least trying to understand what they're thinking, does sort of paint the picture a little bit better. Hourly chart just shows a BART. Nothing more, nothing less. Big push up, sideways, sideways, kind of a double top. Basically, it's the same area, the same range of resistance, and then come down. All right? So come down here on a 15-minute chart, and the next 15, come down to 79.52 would be fine, provided we find support and push back up. But that would, again, just be a swing fail right here and an SR flip. So resistance, well, I don't want to count resistance. Far too many times was it resistance. It did finally break, come back, get the retest, get the hell out of Dodge. All right, so that's what it looks like. I mean, could it go down to $1 tonight? Sure. But, yeah, it's not likely. Not likely. All right? Now, on the 4-hour chart, what's important over here is how this candle closes. A big, long wick to the downside, and you sort of remove the idea of 3 black crows. No wick to the downside would sort of get the idea of 3 black crows. All right? So essentially what you're looking for is there a reaction? Is there any buying? Or are the bears in full control and taking it to whatever level they want? All right, on dominance. Okay. We talked about this morning, starting to develop this new area of range. All right, so we have this support, well, that was flipped, right? So it's resistance now, but it was one support when we came down from this initial check up here on the rising wedge. Which, by the way, we're going to talk about wedges, triangles, and channels in a little bit. Okay. So anyway, yeah, we pushed out of here. We made that one level of support, came back from, I don't know where, but it came back from somewhere. We found support on it, pushed up, and then we got the big push down, right? The big push down gave us this area, solidified this as support at the time because there was a lot of buying, and then price pushed back up. Got back into range, or I shouldn't say price, percent of BTC per dollar got pushed back up. All right, anyway. Came back down, found support on it here until we broke it. After we broke it, we found support in this area over here, which is, you know, it's okay. It's not the greatest little zone. Should actually do this. Okay. It's not the greatest little area, but hey, you know, who are we to judge? It's holding, so if it's holding, it's holding. And it currently is. And since then, the ceiling now has become our previous support. All right, so just another SR flip, but now we're ping-ponging. All right, we have a low, a high, a low, a high. You know what I mean? So it's just up, down, up, down, up, down, up, down. So we could stay in that range for quite a long period of time, or, you know, we look for the breakdown. We are still looking for a breakdown, not exactly a breakup. But, we'll, you know, obviously we'll play either one depending on what it ends up doing. For now, though, I kind of feel like we're going to range for a little while. And that's, you know, it's based off of making this big move here and then ranging for a little while. This big move here, dump down, push, and then dump, support, big move support, big move rejection, come back down. We tried to range here, just didn't last so long. This support broke out. And so I feel like similar to this, but, you know, coming up, down and then range, coming down, you know, and then range. So I don't know. It's what it looks like. Now we do have this move here, which would be a real nice ABCD. We haven't quite gotten that low yet. 67.78 would be the number. That's sort of what I'm expecting at this point. And from here to go back up and then down makes sense. But now we're ranging, so not that this is invalidated just yet, but it's certainly looking that way for now. Even if we do hit that mark, the time period from which it took, A to B to C to D would just be far too long. All right, so that is dominance. Now, the real question, are we just gonna fill the gap? Is that the whole point of everything? Is that what we're doing? Possibly. Sure. Why not? Now, if we do, we got to go down a little bit further than what I wanted to go down. This is down 79.41. 79.41. And let's see, the level I was looking at was down here. That would be like, it's hard to get it right on the thing, 79.71. So it's like a $30 difference. But we are on two completely different exchanges, completely different. This is actually Bitcoin, and that's just a derivative of Bitcoin. So very different, all right, very different, but close enough to spot that we can, consider them relevant within, a handful of bucks. Something to really make like arbitrage not worth it. So like that close. All right, cool. And then the weekly. So we painted this the other night. No big deal so far. So we are just holding the 100. Bang, bang, bang. Last week we didn't even test it, right? And then, this open is far higher than, the 100 at the moment. The 100 at the moment is 77.59. Major weekly level is where we're currently at right now. That's this right here. You could see it line up perfectly, right? Now we've changed that to 8,200 just to make it easier because it was like 8,217. But then down here made sense too. That was like 8,105. So, I hate to do a $100 range. So just kind of called it 8,200. 8,200 seemed like a really good level. As far as this area here, come down here is the check. Retested in this ballpark, and then the push up here, rejection, rejection, rejection. So 8,200 weekly is sort of what we're going with on that. We are still within this little, it's not really a broadening wedge. We're just in that little pocket, right? And that's in between trend lines. So this trend line right here is holding. That's that white one coming back from 5,800. Well, thereabouts. The last higher lows before the all-time low, or yearly low, I should say. All right, and then the other one here is based off of the next move, the next big move. Bang, 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 bang. You just see price followed it so well. It is actually parallel to the heart line of the pitchfork, which is right here, this little skinny red line that I got the cursor on right now. All right, so, overall, it doesn't look great, but again, we're holding the 100, so until we're not, it's just, a risky situation. We're under the 20, we're under the 21, we're under the 9, we're under all of these moving averages, but we are above the 100, we're above the 50, we're clearly above the 200, EMA and MA, so there's a lot shaking right here. It's unfortunate that we have to wait, a week just to get a candle, but a lot can happen in that week, as we can see, just on the daily alone, let alone anything else. All right, let's see. I wanted to go back over here. All right, that's cool. Any questions, concerns on Bitcoin? Anything at all? You guys good? Everybody cool? All right. All right, so I want to talk about some very simple patterns. All right. First, we're going to need a chart. So, oh, that's where it is. Oh, all right. So, my order of BTC at 80.10 filled. Excellent. Okay, very good. Very good. Little front run in there. Nothing wrong with that. Now look at this range zone I have here. Right, this green one. Look at the tap down. Look at that tap right there. Right there. 79.89. What's the low on this candle? 79.89. That's beautiful. So these levels, they do, they play out. They do exist for a reason. Now, those levels were based off of this, which I might have gotten on the weekly. Let's see. Let's see. Well, no, it wasn't on the weekly. Was it? No, not the weekly. Could be the 4, but if it's not the daily, then it's the 4. Let's see. Well, yep, that's good. That's good. That's good. That's good. This is all good. Yeah, so, looking at prior, action, it just gives you an idea of what you may expect. What is it going? Why is it all the way down here? Gives you an idea of what you may expect. I think these were volume nodes. I think these were volume profile nodes. I think so. Yeah, but this is good. Look at that. Bang, 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 bang. Beautiful. And here's something to think about, right? You don't think when you're looking at this one day at a time, right, that's going to be your next 5 candles. And then after a small pullback, that's going to be your next 5 candles, right? You don't think that. So, it doesn't always just show itself and show its hand. Next thing you know, it's just there. And you're like, holy crap, what a move, right? So this whole zone right here, good, 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 good. Retest, come back, retest, come back, retest. So SR flip. Right, paints an M pattern. M pattern drops, dumps lower. And then you got a higher low, higher low, higher low, higher low. Meanwhile, you're blocked off on the top side. Nobody's getting past 80.26. Right, and then you push up to the next level. Here, it's 87.33. And that's how we got 87.33 and 75.85. That's these levels here that make up this larger range, which we should probably change this. All right. That's good. Okay, so good. Let's see. What's a good stop loss? 76.50? You saying for Bitcoin? If you're buying spot, I don't necessarily know that. It depends on what kind of trader you are. I would say it's invalid. What's your reason for taking the long? If your reason for taking the long is this SR flip, then really, as soon as you're on the other side of that line, it's invalidated. So I'd look for a close by 79.44. You know what I mean? Yeah, you have to remember, if you're taking a trade, you should have a trading plan. It has to have an idea. It has to be mapped out. You need an entry. You need an exit. You need take profits. You need RR. Calculate your position size. So you need to know, like you're saying, you already got filled. yet you don't have a stop loss. How'd you calculate your position size? You need the stop loss to measure the distance so that you can measure the loss so that you could calculate your position. You know what I'm saying, Lucas? Still waiting for 6K BTC potentially. Sure. It's definitely possible. There's no doubt about that. It's definitely possible. 42 would make sense. 66 makes sense. 64, 66 makes sense. Like, all those levels are good. Will we get there? Maybe. There is a chance we get there for sure. What happens before we get there? Do we go up before we go down? That's a good question mark. Do we just go straight down from here? That's another question mark. Timing is half of it. Knowing the target is one thing. Say, all right, well, I got my buy orders at 42. You might wait 25 years, and then it might be at 42. That's great. But for 25 years, your capital was in a buy order, doing nothing, making no money. And that's not good. So timing is part of it. You want to be able to at least narrow down local action, so that the bigger plays make more sense. But like looking at the chart just the way it is, my natural instinct would be we cover this. Minimum to bottom of structure here, 94.63, and thereabouts. But then my pattern comes up, and I'm like, well, we got to retest. That's the dropout from the pattern. All right, and then if the pattern's no good, then I go with an SR. Well, this was support. You can't tell me it wasn't. Where's the retest? Maybe by the time we get to the retest is at 97.39. All right. But then that invalidates the swing fail right here, this line. So now you have to say to yourself, well, what's stronger, the pattern or the swing fail? And thus the dilemmas are born to which way do we go? It's a lot easier trading in a trending market. This is not trending. We have a local uptrend, but it's as ugly as it gets. But, essentially you got a low, a high, a higher low, a higher high, a higher low. Okay? So if this finishes up with a higher high, besting this high, well, then we still have a pattern. If indeed it comes down and gets itself below 77.64, well, then we no longer have a local uptrend. And indeed, we would have a new swing fail from here to here. Because the failed rally to continue the trend to make a higher high. All right. So let's see. How are you moving TradingView vertically? Expanding and contracting without clicking and dragging on the price axis. That's only reason I use auto. Such an effort. Yeah, no problem. I use a mouse pad, but you can use a mouse too. It doesn't matter. I slide up, right, and that allows me to expand and contract the price, right? But in order to get it, to shift the candles, I got to click anywhere in the background and hold it. But if I want to shrink it, I do have to come to the axis and do that. I have to come over here and grab it. It's a shame, but, it is what it is. Of course, you could come down, put it in auto, view it up, and then say, all right, well, I want to get in on that right there. That's the area I want to look at. And then once I'm there, I can just bang like that, and then it's free, right? I'm disengaged from auto just by moving the axis or by clicking off of auto. But then I could do something like this, and if I want to go back, then, I can just go right back to where I was. Yeah, we can have we could for sure do like a TradingView intro to TradingView, stuff like that, because it takes a little while to get wrapped around some of these features. And it is it's a powerful piece of software for sure. There's a lot you could do with it. It's not just put the candles on and call it a day. There is more to it than that. But maybe if there's enough interest for something like that, then we'll do that one night this week. All right, so Bitcoin is going to close in the next 3 minutes and 13 seconds. So we'll hang for Bitcoin, and then we'll start talking some patterns. We're going to talk triangles, wedges, channels, and then sort of when they're good quality, when they're horrific, when you could trade them, how you could trade them. Yeah, something like that. New question that looks like, but seriously. No, it's good. Is it a good time for a long for XRP USDT now? I think this. XRP USDT. Well, I'd hold off for a minute. We are breaking out of this channel at the moment. The channel has held us throughout, but we have had these bleed outs, right? So the bleed outs are okay, provided that, we can get ourselves back together. But to get ourselves back together, you got to give it a little bit of time. A little bit of time, a little bit of patience, all right? So, looking at the structure, you got a high, low, high, low, high, low, high, low, right? This high right here hasn't happened yet. And that high was sort of rejected at very similar levels up here. So it is, just a pause. There's no reason to panic. Okay? No reason to panic. But, I wouldn't necessarily say buy this. Our trade, we were in somewhere else. I don't remember where. I have to look it up. So, you don't really want to get it mid-trend, because we could still viably come down, test the 100 like we did right here, find secondary support, and then push back up and maintain, continue the trend. But if that's the case, then you'd much rather buy the 100 or the 20 as opposed to buying, below the 9. So yeah, you're either already in this or it's not time to try to get in. Put it that way. All right. Back to Bitcoin, and what do we got? 38 seconds before we lock this puppy down. Call it a day. See, there's a little bit of fighting going on at 8K. So similar to 82, 8K is not only a reasonable level, it's one of those psychological levels. It's like 8K, If you're upside of 8K, then it's all right, man. At least we're 8K. But you're down now. You're in the 7s. Now all of a sudden things start looking really bearish. But we did lose the 20. That's almost guaranteed. And we lost a 9. So that's not good. All right, we did close this candle down, so here's what we got. Opened up at 82.06, hit a high of 83.14, a low down to 79.89, closed it out at 80.25. So we lost $187 or 2.29%. So off of the day of rest, after the big move, massive pullback, over half of this candle at least. All right, and trying to attempt a little bit of a retest over here on this level, but now things shift. So if we're going to call that a retest, then we're okay. If we're not, then your next retest now shifts much lower. somewhere to the tune of 79.14. So if we're not going to consider this a retest, the next retest on the daily chart, 79.14. This level I still like if we do happen to get here, and that would be basically a double bottom, but holding support, right? And that's all the way down to like 7,800 ballpark. All right, on the high side, let's see. Well, we got to get past here for sure. So I'm coming right. It's the same thing. It's just on the downstairs side of that same node over here, or not node, but resistance zone. And then to maximize high side, the 200 EMA quick test. So that's kind of what I'll be looking at going forward. We'll see. So I'm not mad until we're in the 78s, really. This should hold. It's how you draw it. So there's some flexibility both ways, but I think it'll hold. This is a good flip. It really is. This is good resistance with a great breakout and a quick response retest. That's what you like. So, yeah, not bothered yet. All right, so let me just double check this. I was really hoping there was a keyboard shortcut. Yeah, sorry. I can't help you there. There might be a somewhere you can hold, right? Usually option or shift option would allow you to, this command option, command shift, claw, option shift. No, doesn't look like it. Those are all the common ones at least. Nope, I don't see anything. All right, so let's see. Okay, I'm going to ask the noob question. Why is it important to know the close of BTC? What are we looking for from that info? The candle close, specifically the daily candle, is where a lot of traders make decisions off of. How a candle closes, where and when within context. For swing traders or traders that, will trade like a 1 to 3 day, a 3 to 5 day, a 5 to 7 day position from open to take profit, stop loss, close, whatever. That daily represents, the one time in the market that every trader can agree on closing, right? So nobody has a choice, right? It's UTC 0. It's, essentially midnight. So that being said, it becomes an iconic position to hold or a statement to be made by the bulls and the bears. The statement here, as crazy as it sounds, right, it was a bullish statement, right? Although it's a bearish candle, it's a bullish statement because the bulls defended 8K. That's the only takeaway from that, right? On the bull side, right? They're like, well, yeah, but we saved 8K. Okay, but this is the pretty terrible candle. You're like, yeah, but 8K. Okay, I guess. So rally the troops then, if that's the case, and start getting your buying in. For the bears are saying, look, we came in here, we smashed it down, we gave you a little bit, and we smashed that down too. We controlled this whole candle. All right, price goes where we want it to go because we own it. They won the battle. That's what they're saying. They're saying with this big candle here and the rejection to the high side, they're saying, look for another one of these guys right here. I'm going to paint you another one. Give me 24 hours. Give me 24 hours, I'll get you down to, 7,800. Is basically what they're saying. All right, so let's see. Daily is 8. What? No, that's only 12 hours. 8 a.m. to 8 p.m. is only 12 hours. to 8 p.m. to 8 p.m. It's a 24-hour cycle. So you see this right here? This is the scale, 24-hour scale. So every candle represents 24 hours. Just in Eastern Standard Time, it happens at 8 p.m., right? If we were in California, it would be happening at 5 p.m. Some people out in China and Singapore and those areas over there, it's happening at 7, 8, 9 a.m. Right? Don't worry about a.m. or p.m. That makes no difference. UTC, Universal Time Code, 00. That is when this candle changes. All right, and then whatever your time zone is from UTC, that's how you measure it. All right, Eastern, I believe, is UTC -4, which makes sense because 8 p.m., 9, 10, 11, 12, midnight. That would be UTC 0. So I'm -4. So whatever you are, that's, whatever time it is right now for you, the candle just closed 7 minutes ago. So that is your time. That's when it closes. All right. Nasser, hello. Gives you a sense of market direction based on your trading style, day or swing. Makes sense. Thank you. Yeah, no problem. Nasser, late to the party. You damn right you are. Nasser, give me a chart, buddy, because we're gonna talk about some patterns and stuff. And clearly, I have too much stuff on my Bitcoin chart. So, give me a coin, give me a pair, and let's talk about some things. Oh, look at that! Boom, boom, bang! That's beautiful. Nasser, you're killing me. Come on, buddy, let's go. All right, well, David for the win. Thanks for nothing. Oh, man, I don't know. Hold on. Let's take a look. Do we have enough data here? Yeah, all right, we're good. We're good. That'll work. All right, and if anybody wants any charts looked at before we wrap up tonight, throw them in there now. This way I can take a look and we'll get over to them. Okay, so patterns. All right, first off, we're going to talk about a few things here. With the triangle tool, we have what is considered symmetrical triangle. A perfect symmetrical triangle will have, price essentially make lower highs and higher lows, all the while ping pong itself within this range. You want at least 5 touches, 3 and 2, 2 and 3, 3 and 3, whatever. All right. With the triangle, right, this is when price will meet into an apex. Now, also in the triangle family, okay, this is an ascending triangle. It's ascending because the price is going up, right? The lows are going up. However, right, easily recognizable because you should clearly have an area, sometimes it's just a zone, but an area to which you are constantly getting beat down. And every time you get beat down, you come back and you paint yourself a higher low. Then you come up and you get beat down again, you come back, you paint another higher low. Come up, you get beat down again, you come down, again, another higher low. All right? The opposite of this would be this. This would be considered a descending triangle. And with the descending triangle, it's the exact same thing. It's just the opposite. You should have an area of support that is holding price from going any lower, all the while you're making lower highs. All right. Now, that's these 3 guys. Now, what happens if it doesn't necessarily meet this criteria? Well, that's where wedges come into place. Okay? Now, a wedge, you have a few different ones. But a wedge could be something just as simple as price. Well, now we could probably start drawing. Well, but anyway. So, you have a rising wedge, meaning that price is coming up. Why is that? Ugh. Okay. And, at the same time, you're meeting an area. Okay. But this isn't a symmetrical triangle, right? Because your apex is above, right, your original price, right? The apex is not in the center, right? Your apex is way the hell up here. Similarly, right, it could be way the hell down here. Now, some people will draw the wedge and they won't touch them. They'll do like that to sort of clarify, like, hey, it's definitely a wedge. This sort of eliminates the idea of the apex and that you don't necessarily need it. So you have a rising wedge and you have a falling wedge. The reason why you don't have a symmetrical wedge, well, because that is a symmetrical triangle. Okay? All right, rising wedge, falling wedge. Perfect. Okay, now, what about channels? No problem. That is a channel. Ascending or rising, people call them different things. To me, it would be it would be an ascending channel. For me, it's ascending and this is descending. But a channel is just that. You have an announced ceiling and you have an announced floor to which these are respected. And if price respects after a move, something like that, right? Then you can reasonably consider this being a pattern. Again, you're looking for 3 and 2, 2 and 3, 3 and 3. You want enough touches in here to actually validate that it's not just a thought process, more than hopes and dreams. It's a legitimate pattern. Now, let's go take a look on the chart. I'm sure we'll find something here. Okay, so right away, right off the bat, right, we could see something, right? Price has gone up here, right? Painted ourselves a low, and then we came up, we got a high, then we got a higher low, but then we got a lower high, and then we got a higher low. So what does that mean? Well, it should paint itself out as a symmetrical triangle. So we could do something like this. Now, I like to do this. I take my ray, right, and I kind of do something just like that, right? And then I take my other ray, and I do something just like this. And then I got to ask myself, like, does it make sense? Does this actually make sense? Or do I need to make an adjustment? So I might say, you know what? That looks like it sort of respects price a little bit better. So I might go ahead and change it. It's your chart. You can do it any way you want. Okay? I would change the upper to that. Now the lower side too, I feel like I want something I want it to make a little bit more sense. I want more touches. Okay? The more touches, the more confident you are that particular level was either held or used or did something. When you see someone post a symmetrical triangle on a chart, but the price does this, That to me that's a poor quality symmetrical triangle because it's really not. What are you doing with all of this action in here? Nothing. Nothing's happening there. So for me, I want it to look like this. Or something thereabouts. Okay? And then you have 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 5-point reversal. Okay, look it up. That's a thing. All right, so now that we have that on there, I could go back if I want, and I'll just take my little tool, and I'll just kind of follow my lines. So, oh, there we go. Nice and neat. Now I could take these if I want. I could just get rid of them. And that just kind of cleans the chart up a little bit. Now, some people refuse to have the angle here. It's not a problem. Just go like that, go like that. Line it up so it makes sense, and you're good. Okay, so now at least you have something you can look at and say, okay, well, now I have a ceiling. Now I have a floor. Price came up, gave me 1, 2, we'll call that 3, call that 4, call that 5, call that 6. 6 point. 6 point continuation because we broke to the upside. Okay? Now, if you're going to play around with these candles, you have to understand that your retest, if you do get one, may not line up because you got all fancy over here. All right? If you just left it as is, did something similar to this, connecting this guy with this guy, well, now all of a sudden, look at that retest. Interesting. It's perfect. All right, that's exactly where you would have bought on this candle breakout, close above, come back down by the retest. Now, you may hear people talk about measured moves. So what's a measured move? Well, measured move is just this. Here's your pattern. And your pattern has a very clear set of rules about where you enter. You enter right here. Breakout, retest. Bang. Clear invalidation is below support, generally below your previous low right here. So that's your stop loss. That's your entry. That's your stop loss. So now that you got those two pieces of the puzzle, you come down and say, okay, great. That's a 13% loss if I use that. So it means you got to go at least 26% just to make it worth your while, you know, on a 1-2 risk reward. So now you take your measurement tool, you take the low side. Now there's 2 ways to do this as well. Some will take the very low side of the pattern to the very high side of the pattern. I don't do that because price didn't come down here. Price came down here. So I take it from the lowest candle, first touch on pattern, to the high side pattern, right? And all you do is you just take it and you drag it over to your entry. That is a measured move. That's a 1-to-1 move, okay? No matter where you put this thing, no matter how you drag it, right? It's 183 sets. That's why it's a measured move. Okay? So notice I'm in log scale. So, you know, the higher and lower you, well, we're not really on the greatest chart. There you go. So the higher and lower you drag it, that 183 sets is going to be represented differently. Nonetheless, it's a 183 set move, which ends up being a 36% move, which then gives you RR that makes the trade worthwhile. So if you want, you can take your long position here. Just simply drag this up to, you know, what you're considering your stop at. And then drag this guy up to what you're considering your take profit at. And then this will calculate it for you 2.7 or risk reward 2.7. What? That can't be right. So it'd be like a 1, 2 risk. What the hell? Just doesn't look right. Well, we know that if it was 13% up, right? We could do a little math. 13% up, we know, right? It'd be a 1-to-1. So 26% would end up being a 1-2, and we're clearly above 26. So I'm not worried about it, but whatever 2.77, whatever. I don't use this tool, so whatever they calculate that at is whatever. I just do it manually on the exchange, and you're all good. All right, so that's an example of a symmetrical triangle and how you might play it, how it can be played. All right? Any questions on that? Okay. All right. So let's see. Now, so we already know. So this is good. We kind of took care of RCN at the same time. RCN, we know, just broke out a symmetrical triangle. Now, this is also just one piece of a bigger puzzle. Why? Well, because we have this. This is why it's good to know all your patterns, right? Because they do tend to rear their head over and over and over again. Now, what do we have here? Well, this is a bull pennant. A bull pennant. Basically, a bull pennant is a large impulse move to the upside followed by consolidation in the form of a symmetrical triangle. Now, that consolidation in the form of a symmetrical triangle should happen very quickly. This is dragged out a little bit too far, in my opinion, but it is what it is, and it's still a pattern. So you take this, you copy it, and you paste it, and you smash it right onto the breakout. All right. Now you have a new target. And that new target is a 93% move. Okay? So once again, right, knowing that you have a symmetrical triangle, look around because it may be just one piece of a bigger puzzle. Just like when you have a bottom, you can have a double Eve, a double Adam, and Adam and Eve. You could have a cup and handle, V bottom, W bottom, M bottom. You can have lots of bottoms. All right? But it's important to know and put them in context with other patterns or other just price action or just candles to give you an idea or confluence on what else is shaking. All right, so that's RCN. So let's see if we can find another pattern on, Nasser with BAT BTC. Little late, buddy. All right, so here we are, BAT BTC. So right off the bat, we can see we have some very interesting levels that seem to be respected, except they're respected on a bit of an angle. So no problem, we just do something like that. Okay, so now we have an upper level or an area to which, right, price is respecting. Every time it gets there, it gets rejected. So what happens if we have a downstairs side? Whoa, well, wait a second. Now we have a channel. All right, now, to find out if that channel is, a perfect channel, just come down here to parallel channel, lay your first anchor on, lay your second anchor on, and just drag it down. Okay? And you'll see, obviously it's not perfect, right? Because our lines over here are not perfect. All right? But we're going to leave it nonetheless because a little bit of cushion either way is okay, right? We're not super sticklers for every single set, especially on, crypto. All right, so we have a channel. And now we know how to trade the channel, right? The channel is the channel until it's not a channel. Sorry, but that's just how it works. All right, so you have a high side. You have a low side. You didn't really get the high side over here, but we'll call that the highest. Then you got a low. Then you got a high. And you didn't quite get the low down here, so you got that low. right? But you did get that high all in the same candle. So let's slide that over so we're not confused. So essentially, you can short every time you get near the line on the high side, and you can long every time you get near support down on the low side. Now, if it starts to move away from you, meaning this is a nice touch. This is a no touch. This is a nice touch. This is a no touch. If it starts to, the gap in touching on support gets higher and higher and higher, now all of a sudden you're trading on the median line, which is like this heart line right here. Then you got to start thinking about either changing your channel to match the newer price history or look for another pattern. It may no longer be a channel. All right? So, it's just that easy. Now, if we take this same action and we take the most recent highs, right? That follows our channel. But we take the most recent lows, like I just said, that's a little gappy right there. Now, all of a sudden, we painted a little bit of a different picture. For the most part, we're respecting the channel, but we are indeed forming a rising wedge. Okay? Now, it's important to know that because the channel could just be a channel forever, right? Until it's invalidated. A rising wedge tends to break to the downside. Right. Okay? So you want to be familiar with that. Plus, you want to know that your support levels may be changing. Instead of riding the channel, you may be riding these levels. Which eventually you'll be on the median line, right? And so long as you maintain that upper resistance zone, well, then you have yourself a rising wedge. So for a BAT BTC, according to this, I would be looking at a short, and I would be following this trend so that when price meets it, I would be looking to buy long. Invalidation points on something like this, again, goes back down to either previous structure, which in this case is all the way down here, or you could just do like low side on the current move, right? So here's your current move, right? Let's say you buy up here, because that's just where it ends up being, then your low side move is actually the same candle we're talking about today, this side right here. All right? So that would be your stop loss. This would be your entry. Let's just say, like wherever that thing ends up coming down to where it meets, right, this level, okay? And then your high side target changes every day or every 4 hours or every 1 hour, whatever chart you're on, all right, to match the ceiling, right? Because you want to front run it a little bit and sell it. And that's your position. So that's your move, right? And your position size will change accordingly, no matter where you bought in. And then that changes the distance to your stop loss, which then changes the distance to your take profit. So you have to be flexible because your take profit is going to change every day. It could go all the way up here. All right? So there's a channel and a rising wedge. Very nice. All right, now we'll go to Matic BTC. Okay, so Matic BTC. Now look at this. You should see this right away. See that big impulse move up, sharp incline down. So the sharp incline down, right, for something like this, I would just do this. I would kind of ignore those big wicks because that to me makes more sense. Just copy and paste it right down here, right? And then take one of these guys over here and again, bang. Well, since I didn't use it, well, whatever. All right. So that's what you're looking at. Here's the pole, right? But here's a flag. It's not a pennant. This is a flag. A flag is generally like a 45-degree angle downward after a large impulse. All it is a pullback. It's just a fancy name for a pullback. So here's your low, right? There's your high, thereabouts, right? And your pullback was almost tapped the 618. Well, in fact, I guess you probably should do the whole move. So then you're sitting around the 5. All right, about 50% move. Okay? Just another way to sort of confirm what you're seeing. So then price has come up. It has painted a flag, right? Not a pennant, a flag, and it broke out. Okay? It broke out of the flag. Now, not all flags and not all pennants will get a retest. If you do, however, your retest is all the way down here. Breakout plays like this, sometimes you just buy the breakout. So you have to be a little premature about the whole thing. Measured move again from low to high. From low to high on the breakout. And that is the play right there. Now this could also inevitably be something like an ABCD, in which case you would then measure your A to your B, right? Essentially you would typically like to come here, but that's not the end of the move, right? The end of the move is actually like here. Well, it's kind of there, right? And then your B up here. So you could measure this a bunch of different ways, but depending on what this is, right, that's what you're looking at, right? So it's about a 5 move, not quite a 618, over a 50% move. So you'd be looking at like a 2618 ballpark, so something like that. And then this would give you a measured move extension, 2618 extension off of, right, your A-B pullback. Now, if you're doing straight up Fibonacci pullback like this, then you're basically close to a 6, which is very, very close enough to a 618. And if that's the case, then yeah, you'd be looking for either a 1618, which would then be right here, ballpark, 162, or a 2618. All right, because those are extensions off of this move. It's nothing more than Fibonacci, right? Just like this, right? And you got your pullback play right here. So then you just take this, you take this, you take that, and then bang, 1618 right here. Okay? Nothing more than just a move, like a calculated move based off of like target extensions. All right, so that's Matic. Matic is looking good. It's got a nice breakout play. Now you could call this a channel if you choose. It is, and you broke out of the channel. That's fine as well. If you are sticking to just the wicks, then things are going to look differently. So you take this, you take that, and then you have to decide, are you using the most recent wick or the first one closest to the actual action, or are you doing the most recent one here? Now, if you do it like this, look how well that retest is. And then, of course, your position changes. That is your buy-in. Okay? And in which case, this, right, is no longer really a bull flag. So you get rid of that, and you just play the breakout play. So a breakout play like this, you're really just breaking out of a channel. So you don't have a measured move or anything. So you got to go at previous structure highs as an area of resistance. Right? And then once you clear that level of resistance, then you're looking for previous structures. Something ballpark, that makes sense. This is an area of resistance right here. That's not a bad zone to at least be thinking about pulling some profits. Somewhere around 231. All right. All right, cool. So that's Matic. Let's see. Cocos. What? Oh, God. Okay. Take a look at the chat real quick. On H1 current for RCN is that class as descending or pennant. Too close for me to call 100% on the first 3 rectangle patterns shown. What is the expectation when we reach the end of the apex? What should we look for to not lose our butt? All right, without definitely not understanding the question there. First 3 rectangle patterns shown. Oh, so just the ones I drew just in aqua? Like on a blank background? First off, you should never hit the apex. All right, so we might not get into it tonight, but when we talk about quality of patterns, like this would be an ideal pattern, okay? And by ideal pattern, I mean it'll have the right amount of touches. Let's say price approached it from the bottom. You got a touch, 2, 3, 4, whatever, 5, right? And then 6. All right, so let's say you got a 3-3 touch. Everything looks all honky-dory, and it looks like this. It legitimately looks like a symmetrical triangle. Well, between the 50, which I got to do it by eye, but we're going to call that 50, and we're going to call this 75, that is the ideal breakout zone. Between 50 and 75% of pattern. This should have done that. Okay? This whole zone diminishes the pattern. And the closer you get to the apex, the less quality the pattern is, and therefore the less you would risk on even playing that pattern if you were even going to play the pattern. So in my opinion, you get to the apex, this thing failed. And you just kind of like spit out sideways. Either you drew it wrong, right? Or it's a poor quality pattern. In which case, if you're still going to play it, you maybe play it with like 25% of what you would normally put on for a position size. Because it's a bad pattern. Right? You want to play quality setups. If you want to play terrible setups, that's fine. Just don't risk a lot on them. And understand that it's not a good pattern. You know what I mean? So understand that the quality of the pattern is poor. All right, so there's, a level here. Right? So this was heavy resistance, obviously. We broke down. We pushed up, we gained 1 level back, tested 1 time to the high side, and then we broke out, and we got the retest. So, that's it. Yeah, this would be you buy at 13. Unfortunately, because you were talking about 13 sats, there's not really a ton you could do with a chart like this. We could say this is our high, and this is our low. But you already hit the 1618, so it's like, if any of these levels make sense, these would be possible targets. But realistically speaking, every one of these like little shelves is a target. That's a target. That's a target. That's a target. And of course your high and your all-time high. So if any of these have like like a coinciding variable with it, then I'd feel better about that, but really not so much. There's nothing really happening here. Nothing's matching. So you could just do, your overall high to your overall low, and then you want to shoot for like the 236, in which case you already got. So your next level will be a 382, which is 16. which because of the freaking super low set, 16 is like an incredible range. Oh my God. So this level ends up being 16 as well, which is good because it's a level. So that would be my target, really. Buy 13, sell 16. I mean, there's really, it's just not too much you could do with this. All right, let's see. You answered my question. I'll hold off till you're done before asking again. Okay. Awesome explanation. Thanks. You're welcome. Ignore my last question. It resolved into a pull pennant on 1 hour chart inside the measured move from daily pull pennant pattern. Okay, very good. Awesome. How do I feel about Elliott wave theory, the 5-point up, then correction ABC? Does it work in crypto? There are Elliott wave crypto traders. Finding a consistent quality Elliott wave trader is difficult. I love theory. I love Fibonacci levels. I love Gann theory. And horizontal support resistance and measurements within scale. I mean, that's Elliott wave is far more than that, but it's that in a nutshell. Impulse moves that are measured moves based off of previous horizontal support resistance tied in with a very calculated, very demanding set of rules for waves and what minor or major or larger wave they are. What I don't like about Elliott wave is what seems to be a constant adjustment in theory. In other words, I'll hear a lot like, this may be the third wave of a larger major, ABC correction. Okay, well, maybe and maybe not. Like, when are you going to know, and when can I get a target? Or I'll hear something like, oh, what was wave 3 is actually now wave 1 of a bigger move. Okay, so what happened to the other? Oh, it's just invalidated. Okay. And then you'll see a lot of this, like, well, actually, I got to move this over here because that's, and then I got to do that over there, and then let me see, I got to do this over here, and it seems to be a lot of maybe. I don't know. Why don't we wait until the whole pattern plays out, and then I'll put all my lines on there so they make sense. And that I don't like. I want a hard line this. Here's your high. Here's your low. Here's your target. That's not gonna change. Your target's 16. Doesn't matter what wave it is. Doesn't matter whether it may be or may not be this, that, a minor, a major, a super duper, a giganto, or a micro. It's not a correction or a W or a 1, 2, 3, 4, 5 or a WXYXZ or a WXY Elliott double combo. It's none of those. It's just a level because the level makes sense. Because it's a 38% retracement from a 28 high and a low of 9. That's why. So although I can appreciate what it is, I don't necessarily know any traders offhand, not that I've had contact with, that are really truly successful trading Elliott waves. But they're out there. You know, I know JC knows a few. They're definitely out there. But no, I haven't had the time to really study it. That's something, that discipline is going to take far longer than, you know, patterns and price action and breakouts, and you know, it's a very lengthy discipline. It has a lot of rules, which again, I don't think I've ever met anybody that actually knows all the rules. So yeah, I guess that's kind of where I stand with that. I'm intrigued by it. I just don't know enough about it, nor do I know anybody that I could really rely on to say, okay, you know, I love what you're doing. Let's learn something. All right. Cool. All right. Well, we'll throw Bitcoin back up real quick. We'll see what it did in the last 45, 50 minutes or so, and then we'll call that a night. Okay. So let's see. We did not get the big push down. So if this ends up being the low of the day, then we're going to have to consider that other low like a front run retest, which is kind of a shame. Would have been nice just to get it out of the way. But be that as it may, it's not a problem. It's not a problem. We'll take it for now. Let's see. I wonder if we drag that out. I wonder if we are going to get a little confluence over here, a little bounce back. Now, if I put it at the highs over here, then it's kind of like a retest, which is kind of interesting. It is still, you know, it's still a range nonetheless. It's just that you broke range, you came back and you retested it. You know, it could be a thing. Like I said, you have to be flexible enough to play with your chart to sort of understand what it's doing. But it looks good. You know, it does actually look good. The hourly would put this retest here from the bigger move right here. And then the downstairs side, we didn't get this. And that got superseded by previous structure. So structure came in, took over, and said, you don't need the retest, I got your back. That's possible. It'll be an interesting day nonetheless. We'll have to see. If we do get back up here, 8079 to 8100, right, we're going to have to play this zone and see, you know, is it really going to be able to hold, or is this just a quick little, you know, SR flip dump retest where we come back down and we actually get a touch on this like we're supposed to. So we'll see. There's a lot of time left in the day. All right. Excellent. Well, I hope everybody had a good time, a good night. It is Tuesday, so, you know, we're getting on the middle of the week already. Before you know it, tomorrow, middle of the week. So we'll take it from there. I want to see you guys on the exchanges, and until then, happy trading.